Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Mike is on a boat, Catalina Island, so he's coming to us courtesy of Elon Musk's satellite program. So we're benefiting for technology here. If we start on Exhibit C, there's no real news here. It's covered last week. There is an estimated 2025 column, which I think is pretty solid. I've been through not only our energy EIA report, but also the OPEC report and the IA report. And they're pretty much lined up with the 104.5 million barrels a day of supply and demand. By going through all these reports, this chart is much better because the other liquids line, which is not in the EIA numbers of 29 million barrels a day, that's not crude. The amount of crude produced, crude oil that qualifies as crude oil, is only about 73 or 4 million barrels a day. The 29 includes condensate, NGLs, all kinds of things that come out of the industry. But it's pretty hard to explain that 75 when everyone uses some number around 100 million barrels a day. So it's just the way people think about the business. So it's kind of inaccurate, but you have to kind of go along. I would say on the demand side, the question marks are probably not us. We're up a little. Europe's just flat. Japan's flat. India's up. China's up a little. But, I think the demand side's pretty solid. Now, there's still 3.5 million barrels of surplus production, mostly with Saudi Arabia and the Emirates. The price of oil depends on the Crown Prince of Saudi Arabia and his advisors continuing to withhold somewhere in excess of 2 million barrels a day from the market. I would not, if there was an oil producer that I really was interested in owning, and we have some updated numbers here that we did over the weekend, so I'm going to cover some of that. I think I'd wait. I think that I might see it cheaper later. On page 2, I'm going to make the same comment about waiting on natural gas. You see the price last Thursday, which gets folded into this schedule, was only 203 for Henry Hub. Now, it's a remarkably low number. It is for the August contract. The September contract is also very low. As you get into November, December, it goes back up over $3. Even with these very low near-month prices, the average price in 25 is $3.45. The strip right now is $2.45 for the year. That's the historic price through June, maybe July, plus. So in order to average 260, which is the estimate here, things have to improve quite a lot in October, November, December. But that's possible. What's happened is storage is 500 Bs more than the 5-year average and 200 Bs more than last year. And people are just worried with the August and September contracts that they're going to start trading for 50 cents or something, because if you took delivery, there's no place, you'd have to pay someone to get storage. So I think this is an aberration, but because we don't know, again, if you were interested in acquiring a natural gas producer, I definitely give yourself 30 or 45 days and see what happens. the cash flow statement for the U.S. government, I covered this last week, but not everyone's on every Wednesday. It's a little odd to say the CBO forecast includes 22 and 23 because those are years that have happened. I've become convinced in looking at these numbers that everything is an estimate. The next time this page gets redone, we're going to call it CBO estimate, not forecast. The pattern's pretty clear. We are, our deficit is running about $1.5 trillion in a full employment economy. We should be deficit of maybe $500 billion. So we're overspending by $1 trillion. Neither political party, including the newly minted Democrat nominee, Kamala Harris, is talking about reducing spending. It's be next to impossible in the 25 forecast to find $1 trillion of savings. I mean, all other is 1.4 trillion. That was 910 billion before COVID. But I mean, let's say you could take 200 billion out of that possibly. I mean, that would be a hard political thing to do. Everything else is kind of automatic. Social Security, Medicare, Medicaid, veterans, interest, pre-COVID interest was running under 400 billion. Now it's almost $1 trillion. So, I mean, there's 600 billion right there. Well, what are you going to do? I mean, interest rates may come down, but even at the trillion on the 35 trillion of debt, or 35, that's only a 3.2% interest rate. Well, 10-year bond is still 420 or 430. The Treasury bill rate. I mean, to the extent you rolled the federal debt up over, the interest rate's going to go higher. So the economists who say deficits don't matter, I think that's called modern monetary theory or something like that, which includes our current Treasury Secretary, Janet Yellen. Clearly, they are mattering because we cannot continue to run this kind of deficit. So where in the world are you going to reduce spending? Now, if you go to the most Democrat politicians, probably a lot of Republican politicians say, well, we'll increase the corporate income tax. And if you go up to the revenue column, the corporate income tax is around $500 billion. Our corporate rates are already higher than most other places in the world. Trump talks about tariffs. That's in that excise and other. But I mean, that only raises $200 billion. Payroll tax, which is, supports Social Security and Medicare, goes up every year as the amount, that people, as the number of people working and what they get paid goes up. And then have individual income tax at about $2.5 trillion. I'm really skeptical that you can raise more than, say, in 25, $5 trillion in a 29 trillion GNP. So something's got to give here. And we can expect during the 105 days or whatever it is to election day, neither one of the candidates are going to take this up. It used to be said that Social Security was the third rail of American politics. I think the deficit now is the third rail. And my personal hope, is that we elect Trump, despite the risk that Trump represents. I think there's a chance in a Trump presidency to have someone at the Treasury Department or head of economic advisors that will focus in on this issue. It'll have to be solved gradually, not all at once. But at least it would be good to try to take 200 billion out of spending and get a little closer. So with that, no more talk of politics from me. Mike or Jason, anything else to
add? No talk of politics from me either.
I mean, it's been nothing but political news since we last got together, but I think you got to look through the politics and just keep following the economy. One thing I was thinking about is the way we kind of look at things is it's either a trend or an event. And a trend is something that lasts far longer than a presidency, certainly even 2 terms. An event would be something like a policy change or a new president. So there are going to be investment opportunities, but they're not your typical long-term ones. So if the fundamentals of whatever you're investing in are still there, that should be fine throughout whatever presidency there is.
We let off with healthcare, and we've got a lot of other stuff to cover. And as I say, the three of us swear off talking about politics. Any health news, Jason, especially as it affects Vertex or Lantheus or Harrow?
Nothing really affecting them. I guess the one thing I saw recently was projection of medical costs rising 8% for next year. So that's not a good thing for the budget, the Medicare and Medicaid budgets there. Then the other thing that's big in the news, and we talked about it last week, was the government going after PBMs. The PBM companies are pushing back and trying to justify their value in the ecosystem. One thing interesting is United Health Group reported earnings. Most of their earnings growth was all attributed to the PBM. So it was the Optum Group, and then the Optum Group specifically said Optum RX is the growth driver. Sales revenues there grew 13% year over year. So it's their growing business, and I think they're going to fight hard to keep it.
Mike and I believe Jason Wallace is one of the only people we know, maybe kind of only people anyone knows, to try to explain what happened with CrowdStrike and Microsoft and why Delta had to cancel thousands of flights. Is there a 3 or 4 minute analysis of what happened that would be useful information for all of us to try to figure out where we want to make our investments or how we want to organize our lives?
I won't tell you how to organize your life, but certainly what happened last week with CrowdStrike was basically the whole reason we don't invest in these companies. They're one hack or one software bug away from ruin. Maybe it's temporary, but it was a pretty painful day for CrowdStrike shareholders. So what occurred was at midnight Thursday night last week, they rolled out an update to their cybersecurity platform. And you can think of that as an enterprise-grade antivirus. So this is something that needs to be updated probably daily with new virus signatures as they're discovered out in the world. So since it's security software, it can't run in the normal user space how you use a computer. So if you start up Word and Word crashes, just that program goes down. But since it's a security software and it's embedded into Windows, in this case, if it crashes, Windows crashes. So what happened last week was this updated file went out with the updated virus signatures. The CrowdStrike software read it, started executing it, and it had a pointer to a location in memory that was invalid. So then the software tries to read that location and crashes. And it's what we call a null pointer. So you can kind of think of that as if you're trying to give someone directions to your home and you say, just type into Google Maps 000 Main Street, right? They're never going to find your house and you won't have your dinner party or whatever. So really it boiled down to kind of 2 failures at CrowdStrike. The software itself wasn't checking that these pointers and parameters in the program were valid, and which it should. And if it discovers an invalid parameter, it should kind of gracefully handle that and not crash the server, the Windows server in this case. As well, normally when you roll out new updates, you'll do a rolling update. So meaning that's incrementally, you roll it out to some percentage of your users, and you'll see how that update performs. If it throws any errors, you can roll it back and kind of investigate what happened. CrowdStrike didn't do either of these things. The update obviously failed, and they rolled it out to everyone globally at once. So, even though CrowdStrike discovered the problem kind of immediately, the damage was already done. The software was already out there on everyone's computers. So basically, every Windows server that was running CrowdStrike software crashed and couldn't be recovered. So this was, as you mentioned, flight, scheduling systems at airlines. Banks couldn't process transactions, all kinds of things. So kind of globally chaos. And CrowdStrike was the number 2 player in this space behind only Microsoft. So it affected, I think the stat I saw was more than 10% of Windows servers globally. So a huge amount of software systems. The fix was a little tedious. So someone on IT department had to physically go access a server, delete this new file, the updated file, and restart it. So even though the fix was fairly simple, it was tedious that everyone had to go update these servers.
Sorry, I was just going to say that you said it was a rough day for shareholders. It was a rougher day for chief information officers and public company board members because, there was an old saying that like nobody ever got fired for implementing IBM, and you could apply that to a bunch of different brands. The question is, what's the feedback going to be? What's the feedback loop going to be when the boards of directors get together and they pull in the chief information officer who made the decision to go with CrowdStrike? And what's he going to come back and say is like, well, this won't happen again? Or are they going to say, we're going to go with a different vendor because we lost faith in CrowdStrike? It might be, who's it go to? Does it go to Microsoft? You said Microsoft was kind of the leading vendor in that field.
Yeah, it's a competitive market. They're number 2, and I think they're 10%. Microsoft is in the low teens of market share. So fragmented market, and I think it'll be a hard sell if you're a CrowdStrike salesperson. That they're just going to go to a competitor.
Jason, is this an argument, or is this to go to Mike's point about the board and the CIO? Is this an argument to go to Amazon or Azure rather than have your own servers?
Well, it affected Azure also. So it affected any Windows server, whether you're running it yourself or you're running it on Microsoft's data center, that had this software installed. And ideally, everyone's running some version of this kind of product. So it's there's not really a way around it. You just have to hope these companies do better in the future.
Wow. So if I used Amazon Web Services or Google or Oracle, the other cloud companies, I didn't have a problem. I just had a problem if I was using Azure or Windows Software.
Yeah, that's correct. But that's not to say that this problem couldn't occur, on those other systems. It just happened to affect Windows servers running CrowdStrike this time. And Microsoft tried to prevent this kind of thing from happening in the early 2000s. They were restricting the level of access that these antivirus cybersecurity companies have on the systems, but at the time, they're in a little bit of regulatory hot water, and the antivirus companies pushed back and filed some antitrust complaints. So Microsoft backed down on that.
So wasn't that an EU regulation that required Microsoft to open up that kernel, and that was kind of the reason this vulnerability exists?
Yeah, I think the EU were the ones that pushed on it, but it was really the antivirus companies asking for that, and the EU was the first regulatory group to step up and pressure them.
Wow. Well, thanks a lot for the explanation. I've seen nothing that came close to the explanation you've just given us.
Yeah, so no problem.
Why don't we have 10 minutes left. We could talk about chips. We could talk about other companies. Why don't we talk about Tesla for 10 minutes? We haven't talked about Tesla in a while. They just reported their results. They put off the investor day or whatever they're going to have on tax season. Model 2 and whatnot. Mike, you're out on the water floating around. Why don't you lead off on Tesla? I mean, is this thing going to go back to $100? You think, or how are investors going to cope with not having, anything but flat to down quarters for foreseeable future in terms of cash flow?
Well, there's a couple of ways to look at it. What we saw in the results is that they were able to continue to move units, and they're more than comfortable from a cash flow perspective. So from an investor's perspective, you want to look at the different businesses they have and say, what are they worth? Ideally, you're buying Tesla for, if you like to buy things for less than they're worth, ideally, the way we look at Tesla is if we can buy it for at or near the value of the car business, then we get the rest of the stuff for free. And what's the rest of the stuff? You're probably familiar, or at least heard a little bit about autopilot and maybe the application of autopilot in a robotaxi environment. So all of the existing Teslas on the road have access to, or have the ability to pay for access to a sort of demo version of a full self-driving capability. For those of you that have used it, it's pretty impressive. The ability to route right from your house to your destination without touching the wheel is pretty wild. They're about as far down the road as anybody when it comes to achieving full autonomy. Elon Musk believes, apparently, that they are within striking distance of being able to do that. And to get there, you need to be probably an order of magnitude safer than your traditional driver. And they now have the data that they can start backing that up. So on October 10th, they're going to have the robotaxi event. I think that's going to be really interesting. Again, from an investor's perspective, you want to buy Tesla for less than what it's worth. So you may want to just value that robotaxi business at zero, or it's kind of like a call option. The next thing that's kind of has the potential to be really big, but today is practically nothing, is the humanoid robot piece. And if you've seen these, they sort of look like little human robots. And apparently they have them working in factories and doing relatively minor tasks you probably could do better with a different robot. But the interesting thing about them is their broad applicability. If you can teach this human-like robot to do human-like things, you can replace a lot of the monotonous labor associated with manufacturing. So again, this is something that we think is technologically extremely interesting and very valuable if they can make a commercialized product out of it. But do you really want to pay for that? And I think that's the challenge is, as an investor, is what is the price at which you're willing to pay for any company that would give you a fighting shot at not losing your principal. So the way we look at it is, if you can buy Tesla for the value of the automotive business and you get the rest of it for free, that's a pretty good deal. And we figure the automotive business is worth at least $100 a share, and probably up to 160 or so. And that's based on the fact that it probably is at a cyclical low point when it comes to its ability to generate cash flow. And we probably saw the cyclical high point during COVID. So we think long-term, it should be a 10% operating margin business. So you can back into a free cash flow valuation kind of from there. But I think if you look at those three businesses at Tesla, you will, you can kind of come to a conclusion that whatever you're paying above about $160 is the value of these other things. And that's when, the price has got up to $250 a share. There's a significant amount of value attributed to these other things.
3.2 billion shares outstanding, $100 would be $300 billion. What kind of free cash flow multiple would you assign to the car business on it? Not at a low point in the cycle, but say a midpoint in the cycle.
Yeah, it's a good question. I mean, we often talk about 20 times free cash flow as an ideal place to buy. Uh,
Yeah, it's certainly comparable. If you look at the other four companies on page one, some of these prices may be out of date, but they probably average about 30 times free cash flow. So, I mean, you could argue that Tesla's position in EVs, the fact they have factories successful factory in Shanghai and China, two factories in the U.S., California and Austin, Texas. They've been able to open a plant that in Germany is very competitive. In Germany, maybe not competitive against BYD, but competitive against everyone else. I think I kind of go along with the idea that business standing alone, the midpoint in the cycle, because they should be able, they have good cash flow, they have a good balance sheet, they should be able to open, what would you think, Jason, maybe a factory every 18 months or something like that. Each factory is another 500,000 cars. Is that one way to think about the car business?
Sure. And I believe Elon in the past gave a stat of how fast they think they can create new factories. Because I believe it's been a pretty exponential decrease in time between opening factories. So, but to that point, it was interesting remarks he made yesterday around the Mexico plant. So the Gigafactory in Mexico was slated to be the one that makes these new Model 2s or robotaxis. But given Trump's recent comments about the willingness to impose 100% tariffs on cars made in Mexico, he's kind of put that on hold. And maybe that's a reason he's politically aligning himself with Trump and providing donations. I think Trump's words on 100% tariff on autos in Mexico are kind of a negotiating point that he just throws out there. I don't think it'll be the case.
Designed to World College, Michigan, probably. 300 billion at 30 times would be 10 billion from the car business. I think with 4 plants, Mike, Jason, having 10 billion of free cash flow from the car business, mid-cycle pricing, it sounds okay, doesn't it? Maybe a 5th plant, including Mexico or wherever the Model 2 plant's going to go.
Yeah, I think so, because at that point, you're talking 2-ish million cars, call it 2.5 million cars at $45,000 ASP and a 10% operating margin or free cash flow margin. You kind of get to that $10 billion cash flow figure.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
Hi everyone, it is Ali Shan again. I'm on board OC68. Last time you guys saw me on board this boat, we were preparing for the Chicago Mac race. But now we're almost done with our Midwest program as we're delivering the boat back to Port Huron. We just completed 2 Mackinacs, the first one being Chicago Mac, which came with a pretty sporty night with a thunderstorm coming in around midnight. And our most recent Mackinac that we raced was the 100th running of the Baby Mac race, which was a lot calmer, and we had Dawn Riley on board for her 60th birthday, along with a lot of her family as well, which was fantastic because we were all able to learn from such a good bunch of sailors. Over on the East Coast, we've still been actively competing and racing as well. We had our courageous team led by Luke Galvin and Gigi Fisher compete in the New York Yacht Club Race Week, along with a group of students from the Met School in Newport as well. And this week we have our 3rd Triple Crown on the South Shore of Long Island, run by our high performance director, Sweta, along with our PRO, Patrice. And we are excited to have 2 more of those events coming up in the near future. So be sure to check out oakcliffsailing.org to stay in tune with all of our updates, along with being able to register for future events. Thank you.
And now back to the show.
Right. Good. Well, we've run out of runway. Just one comment for Jason, especially in trying to figure out whether NVIDIA will continue to be able to sell chips with these huge margins. The Google results, the Alphabet results, it seems to me one of the things that was noticeable there is something you've been pointing to, Jason, which is they're continuing to have a pretty darn heavy CapEx program, 10 or 12 billion a quarter. And I think they said during their call that they expected that to continue. Some significant part of that CapEx goes into NVIDIA chips and other equipment, I guess.
Yeah, I think it's good news, bad news for NVIDIA. So the good news is they continue to spend a tremendous amount of money and will into the future. I think the bad news is that it seemed like the market reaction after hearing that was negative. So will they get pushed back on spending so much? And I really see that as the upper limit of what NVIDIA can sell is if they'll capture a large percentage of all these big tech companies' CapEx budgets, and then kind of what's next.
Yeah, fair point. Good. Well, we've blown through our 30 minutes. We promise to do more healthcare next week, and also promise to try to spend less than a couple of minutes on politics until we get to November 5th. And with that, everyone be well and stay healthy, and we'll talk next one. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.